The Federal Reserve raised interest rates by 0.25 basis points today and released a policy statement that inflation has eased somewhat but remains elevated. The Federal Reserve aims to achieve an inflation rate of 2% over the long run and anticipates that ongoing interest rate increases will be necessary to attain a restrictive monetary policy stance. The Federal Reserve raised interest rates by 0.25 basis points. The Federal Reserve released a policy statement after the meeting, stating that inflation remains elevated. The Federal Reserve seeks to achieve an inflation rate of 2% over the long run. Instead of 3%, the Federal Reserve plans to continue reducing its holdings of Treasury securities and agency debt. The Federal Reserve will continue to raise interest rates and carry out quantitative tightening. The Consumer Price Index (CPI) inflation rate was 6.5% in December and the January inflation rate will be released on February 14. The Federal Reserve is expected to raise interest rates 2 more times in March and May. The market is expecting the Federal Reserve to stop raising interest rates after the March 22 meeting. Quantitative tightening involves reducing the Federal Reserve's balance sheet. At the press conference, Jay Powell warned about the lag effect of interest rate increases, and that the full effects have not been fully felt by the economy yet. He also mentioned that the labor market remains strong, but housing and business investments are softening. The Federal Reserve will also continue reducing its holdings of Treasury securities and agency debt. On February 14, the January inflation rate will be released, which may indicate further inflation due to rising gasoline, $4.2/gal, and food prices, and a tight labor market. The Federal Reserve is expected to raise interest rates 2 more times, bringing the interest rate to 5.25%. Quantitative tightening, the opposite of money printing, remains in effect. The Federal Reserve Chairman, Jay Powell, warned about the lag effect of interest rate increases and stated that the full effects have not been felt yet by the economy. He also noted that the labor market remains strong but the housing market and business investments are weakening. Thank you for tuning in to my videos. If you enjoyed the content, please make sure to like, subscribe, and leave a comment. Your support means a lot to me and helps me to continue creating new and exciting content for you. Don't forget to hit the notification bell so you never miss an upload. Thank you again for your support, and I'll see you in the next video.